account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
As they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Oh, yeah. It is Tuesday, November 5th, a little bit after 5 p.m. Central Time, the best time. It is our last day as free men and women. What's going on, everybody out there? You are watching The Price of Truth, a little podcast where we like to explore the incentives that govern our world. And could there be a better day to explore those incentives, or a better person to explore those incentives with than Election Day with Mr. Chris Vecchio. Chris, how you doing, my friend?
I am doing well, Victor. I am excited for tonight. Did my civic duty. I voted. I'm going to go poll watch later because that's what good Americans do. I'm ready. This is like my Super Bowl. This is like 4 years of FOMC meetings in one for me.
Huh. Can I ask,
No.
I had I had you pegged as an early voter. Strange to me that you voted on the day of a little bit. Unpack that for me.
I live in a nice suburban town in Westchester, New York. They have cookies at the polling stations from the local bakeries.
Okay.
Free cookies. Free cookies. Vote in person
Free
day
cookies, Victor. What's up, everybody out there? How are you? Hopefully you're doing terrific. Shout out to everybody watching on tastylive.com. You are the GOAT. Shout out to everybody watching on Tasty Trade desktop and mobile applications. You are double goated because you know exactly what to do with your money and where to do it with. But if you want to be part of the conversation, there's only one place you can do it, and that is on the evil. Let me back up for a second. That is on the evil Google YouTube. So hop on over to YouTube, type in Tasty Live, find this beautiful channel, navigate over to the live tab, and jump in to this conversation. It's probably going to be lit today. Who knows? you want to be part of the conversation, the dope producers behind our show, Matt and the gang, have already put up your comments and your screen names on the screen. Have at it, you animals. This is your last day of free speech. You might as well make good use of it. Just start. I'm just kidding. Let's spoof the Google algorithm. Type in as much as you can. That way we can get as many people in here as possible and save the world one view at a time. Christopher, before we get into the meat and potatoes of today, suppose an interesting day of risk, my friend, a wild day of risk. What says Chris Vecchio about this little, I don't call it a melt up. 1% is not necessarily melt up, but a positive day in risk asset. What say you, my friend? Is this a little early vol crush for the people in the back?
Depends where you look for vol. VIX 1D skyrocketed higher today. That was quite the move. But when you look at VXX and VXZ in the futures market, both came down markedly. VXX was down by a full point. And I think if you're trying to contextualize the moves in volatility today around the election itself, I think we have a pretty interesting picture, at least an interesting story that we can tell ourselves right now, which is to say that the market may be ginned up about what the next 24 hours may bring. We also have a Fed meeting on Thursday. But the tail or the shadow of this election isn't going to last that long. The market's not really worried about a 2020 redux where we have counts going on for weeks and weeks and weeks and contestations going on and lawsuits and yada, yada, yada. The market's saying that while the next day or so we may be counting votes, the result will be fairly definitive and we'll move past this into the future. So end of the year, in any year, November and December tend to be positive months. In election years, they tend to be very positive months. The first 10 days of November, last 10 days of November, same thing for December. You're looking at positive returns for equity markets 60, 70% of the time in some cases as you go back through those weeks since 1928. So this is not a small sample size by any stretch of the imagination. And if we have a definitive result in the next few days, then you get back to your pre-scheduled programming. We gnash our teeth about whether or not the Fed is cutting rates in the midst of an economy that's reflating. We start to worry about Russia, Ukraine, and hey, there are North Korean troops on the ground now. That seems like the war is getting a little bit more global. And we have Iran, Hezbollah, Iran, Israel, Iran, whoever in the Middle East that they're provoking, and Israel, Iran, provoking to be concerned with. So yes, vol crush perhaps today because the market feels like there will not be a long shadow, a long tail to the election results.
Do you believe that?
No.
And why is that? Out of curiosity. Why would you fade the market here in terms of what it's doing with vol structure?
Well, I'm not fading the market here.
I'm not saying you have a position on that, but what you're saying is what the market is doing is not necessarily what you think will be the outcome. And I'm just curious, why is that?
Over the course of the day, we've heard from different boards of elections across the country, or boards of election across the country, that there have been some issues. For example, some polls are going to be opened longer than it presumed. In Pennsylvania, for example, there's a county that's going to be open until 10 p.m. tonight. We've heard issues in Wisconsin already, out of Milwaukee, for example. There's been some issues in Georgia, and that's not to say that we haven't even traversed our way over to Arizona. So this could take a few days, right? It could take a few days to work out and count. I think everyone wishes it didn't, but this is when you have a system where every single state has its own unique election laws. The voting process can take some time. I really wish everyone did it like Florida. I think Florida has it done the best, where you vote early and the Board of Election receives your ballot. They open it up. They get it ready to be processed. They process it. It's counted. A state like Arizona, you send your ballot in early. They open it up and then they wait to process it until election day. So everything's in a nice, neat pile. But in Pennsylvania, you send in your ballot, it does not get opened until election day morning. So Pennsylvania,
yeah,
right?
So
until
wild.
Instead of
didn't they have like 1.5 million votes that would still need to be counted as of 7 in the morning? That's wild.
That takes, when you were doing that by hand, that takes a long time. Having participated in that process previously, planning on participating in that process this time around, you're going to see that you have a bunch of people in a room opening envelopes, holding up pieces of paper. Is this a thing here? Is this a thing? Yeah, okay, we both agree. This is checked. Okay, we'll put this in the pile. We both agree. Okay, so Democrats, Republicans, independent observer. It takes time to do it by hand. So yeah, everyone wishes it was going to be earlier, but with all the absentee ballots that have come in and a lot of the absentee ballot voting structures that have remained in place post-COVID, people are going to have to be patient. So the longer it goes, That means that probably the closer the race is, and the closer the race is, the higher likelihood that it's contested through lawsuits, through the court system, what have you. And let's just say that Nate Silver's right. He conducted 80,000 different Monte Carlo simulations last night. In 40,012 of them, Kamala Harris came out on top. But there was about 200.
People were having such a good time with that online. Like
they were.
That he basically did all that work and got paid with his paid newsletter in order to tell people this is a 50-50. It's a 50-50 toss-up. Thanks, Nate.
Yeah. Well, listen, it's like the old adage, right? Like when you bring in an expert and they come in and they hit like the machine with their wrench and you get the bell, you're like, that was $1,000. What, you just hit the machine with your wrench? You're like, no. It's the 30 years of knowing where to hit the machine that you're paying for, right? Like we're paying Nate Silver to tell us with a high degree of confidence that this is a coin flip because he's such an expert.
So ridiculous. Ridiculous.
But to roll it back,
our best poller came out and told everybody it's a 50-50 toss-up. Thank you, sir. All right, go ahead, Chris.
Yeah, I mean, if it's going to be a close race, the chances are contested. But within those outcomes that he pointed out, there's about 270 out of 80,000 possible projections where you see an electoral college tie. Okay, so let's just walk through that. Why could volatility stay elevated if that happens? An electoral college tie. Not just being someone who's interested in this and has a degree in constitutional law, but I've watched Veep recently. It will go to the House, okay? And if it goes to the House, then yeah, right, yeah.
Why do you do that? You literally put those in there. They're poison pills just to get me.
We're having some fun here. We can't be too tense on election day, right? But having just watched Veep, having
especially
just
the last
Holiday
one.
Inn. No, yeah, it's America's last election. Congrats. Whoever you're voting for, I feel like if the other guy wins or the other girl wins, like it's your last election. So congrats to everyone. But that would mean that it goes to the House of Representatives, right? And seeing as how Republicans control more of the individual states on a House level, you probably would get a President Trump coming out of the House with the vote. Let's say it doesn't go to the House and it goes to the Senate, right? The House can't decide and it goes to the Senate. Probably a President Trump. And if not a President Trump and there's no agreement, then if Republicans win the Senate, it becomes interim sitting President J.D. Vance. Obviously, this is a very small likelihood. But you have to imagine that if you have a close race where it looks like the Electoral College is going to be within a few points, let's say Harris wins Pennsylvania but loses Nevada, you could get like a 270 to 268 Electoral College. You're going to see some challenges here. And so then the tail of the election does become longer. The deflation that you've seen or the contraction in volatility seen over the past 2 or 3 trading sessions in the futures market, it immediately gets reinflated. VIX 1D stays elevated. Do I know what's going to happen? No clue. But I'm going to turn to America's best poll aggregator, and I'm going to say it's a 50.015% chance that Kamala Harris is the next president of the United States.
What do you think about
brave courage?
Oh, were you just calling it? Or
I was calling
it, or you
50.015% chance. It's a profiling courage call.
Yeah. Aren't you supposed to wait for the unspecial to do that? You're not supposed to blow your call on my show.
Sorry, Sosnoff isn't allowed to reveal the results yet. I retract that statement. Rescinded.
Yeah. All right. Bonds rallied a little bit today. They've been poking their head up over the last couple of sessions, not by much, but we came off. We're at 116 and 18/32, I think, on Sunday, and so we're at 118 and change here today. I'm going to walk you through something I was squawking about on Twitter, and I talked to the guys, everyone in the chat about yesterday, just to get your reaction, because I think you've had in the past strong feelings about bonds. I think the MOVE index is elevated. Volatility around most assets are elevated right now. So I want to step through the yield curve and bonds in particular. And I'll go through the dates. I know we've got a ton of people here, so maybe some people haven't seen this. So on the screen, I have basically 4 lines here. The red line, Chris, is the shape of the yield curve as of September 18th. This is the date of the cut, the 50 basis point cut. This was the shape of the yield curve as we went into that cut. The yellow line, then, the next one, October 4th, this is when the Trump trade starts to break out in markets, and the Trump trade starts to break out in betting markets as well. He starts to separate from 50-50. The green line represents his peak odds. So in betting markets and the Trump trade, October 29th was approximately where you had those peak odds. The blue line is the yield curve, cash yield curve as of today. And what you can see here is, though you've seen the betting markets neutralized since October 29th, post-Trump peak odds, you've seen some of the Trump trade unwind. You have seen a relative stubbornness in the yield curve. It just hasn't budged. And I put on the table that either from the bond market's perspective, I hate to do this either or, but like either the bond market does not give a you-know-what who the candidate actually is. They see them the same exact way, which means that movement, while correlated with Trump odds, was not directly related to Trump odds, or that a reversion has yet to take place in the bond market. And this is potentially a really interesting catch-up trade, so to speak, the only market to not have reverted in some ways, in the same ways that Bitcoin has come off of 72,000, DJT just got creamed. I could go on and on and on. I'm curious, what is your thought about the yield curve, either related to what I just laid out or just general going into the election? How are you thinking about yields across the long end of the curve, 10 and 30-year tenors?
So I've had strong feelings on bonds, and one of those strong feelings has been that a Trump victory would be bad for bonds. And this is something that's been articulated going back to June, since the June 27th debate between Biden and Trump. And I say that because if you look through their actual policies that they've set forth and you aggregate them, and we can disagree over whether or not everything that they want to do gets passed into law, right? And so are these the true proposals? Probably not. You got to pick and choose. But just assume we take everything at face value. You want to do no taxes on overtime tips. You want to, raise the minimum wage. You want to expand the child tax credit. Let's add up all the numbers here. And so just as an exercise, going into today Let Me Explain, we added up all the numbers here. And again, who gets taxed, where the money's getting spent, that's really the difference here. But net, when you look at the top line numbers, the estimates from the Committee for a Responsible Federal Budget and the Tax Foundation are estimating that Harris's plan will add about $7.5 trillion to the federal debt over the next decade. They estimate that that's $7.6 trillion in new spending for Harris. That's $4.2 trillion in new revenues. That means that her plan is going to cost $3.9 trillion. The Penn-Wharton budget model is a little bit more conservative and only estimates it's going to cost $1.2 trillion. Trump, he's expected to go at a spending clip that's going to be ballooning the debt by $7.7 trillion, so bigger than Harris, and Penn-Wharton estimates it at $5.8 trillion. So, one, are either candidates really good for the bond market? No. They're both going to spend a lot of money. So relatively speaking, Trump's going to spend more than Harris if, again, everything that they've promised on the campaign trail comes to fruition. There's also the fact that you have these tariffs as part of the funding mechanism for Trump's plan. I know a lot of people say they're just simply tools to bring other countries to the negotiating table. You can either fix your prices or you risk permanently losing American business. And to a certain extent, I get it. It makes sense. You can effectively use tariffs to help negotiate for better trade deals. But up front, that's not what has happened historically. The tariffs get put in place, and then once the pain arrives, that's when the negotiations begin. So if you're applying a 10 or 20% blanket tariff across the board to all goods shipped into the country, including things like coffee and bananas, which we don't have the climates to grow those things, but because of a blanket tariff, they would go up by 10 or 20% overnight, 60% tariff on goods from China. You're talking about a plan that would ultimately put us deeper in the hole. So tariffs become inflationary because American consumers have to pay more for the goods that they want to buy. For some reason, this is a question of debate. I mean, this is like one of the grass is blue, sky is green type of reality checks here. But if I'm an importer, right, I make T-shirts here and I want to sell 1,000 T-shirts and I'm going to pay them $10 each and I buy them from China. And I want to have a $10 profit margin, which means when I get them here, I'm going to sell them for $20. In the future, if there is a tariff on those goods that makes these prices of shirts go up to $15 and I want to continue to import them and I want to maintain my $10 profit margin, I am the importer. I am paying the tariff. That goes to the consumer. So it's inflationary.
The contention comes from the ceteris paribus assumption that you're taking on. So the ceteris paribus assumption says that all else equal, nothing else changing. And what isn't factored in there is the loss of jobs. I'm not like a pro-tariff or anti-tariff individual.
Sure.
I understand that there's a lot of nuance in the discussion. And somebody asked me, hey, Vic, have you done a deep dive into the tariffs? And I go, no, I can't. I've tried to. It's impossible because you don't know. Everybody knows that some part of this is a negotiating chip. It's a bargaining chip, but you don't know to what extent or what the objectives are. And that's purposeful. And that's really tough to model. That's why markets don't really like it. They have no idea how to model this thing. And I'm sort of in that same camp. It's really difficult to model. There's a protection aspect that is going to keep people employed, and that money is circular in the economy. But the problem is, prices are artificially inflated, right? We could be buying $15,000 Chinese EVs instead of paying $35,000 to Tesla. So they're artificially inflated, but that money theoretically is going to keep more people employed and going to give more people wages and therefore keep more money circular in the economy. I think for whatever reason, smart people just try to ignore that part of the equation.
For sure. We wouldn't have an American auto industry without tariffs.
Exactly.
Right? There are legitimate reasons to have tariffs on things if you want to protect domestic industries. And we've seen them done effectively. And we've also seen them done not effectively. It's why if you want to do tariffs, they really need to be done precisely in a niche manner. They need to be targeted. You can't just say we're going to raise the 10% tariff on everything to make American goods more competitive when there's a lot of things that we as Americans use that we don't produce here, that we can't produce here, that we can't grow here. And so it needs to, right? So it needs to be done a little bit more carefully. But either way, if you are saying we're going to go through a period where we put the tariffs in as a negotiating tool, and then those countries that come to the table because they don't want to lose their export volumes, we hammer out a better deal, like with Japan or Europe. Hey, you guys want to keep selling your cars here? You have to let us sell Ford in your markets without the 100% tariff fee. You have to cut the tariff in half. I get it. But it does mean that you're going to go through a period while you're working through the negotiations where everything costs more and it will be more expensive. So we talk about the spending here. If you're thinking that inflation could be structurally higher and a candidate's going to spend more money, what would bond yields do? They're going to price in a higher inflation premium moving forward. And the uncertainty that you mentioned is also part of this, right? The volatility and potential outcomes. The path opens up more and more in the future. And so you have to then, more volatility, lower price. So now you have your bond problem. I think bonds are probably there already in terms of pricing in a Trump victory. That juice may be squeezed because we've seen that come off the board. We see that the Fed is locked in for 25 basis points for November, for 2 days from now, and ultimately December when you get to the market still favoring it. If you get a Harris win tonight, bonds probably see the biggest sigh of relief. And then you go back to what was the market doing in September before we went haywire and priced in all these, the higher likelihood of Trump winning? Well, this was a market that after the Fed meeting was already thinking about reinflation. Bond yields were pitched higher. Asset prices were going up. And so it doesn't mean that bonds are going to shoot back up to like 127, 128. It probably means that they stabilize around 121, 122. And for those tasty traders out there, when you see a move index where it is right now, or just go to the platform, check out IVRs and something like TLT or the notes or bonds in the futures, you'll see that the IVRs are like 80, 90, 100. So I guess my posit would be if you're not trading the election tonight, let's just say that's a Harris victory and you get a pop into the middle part of your 6-month range here in ZNRZB. I know it's not the sexy trade. The money's made taking directional shots. But with the vol where it is, Iron Condor's directionally neutral strategies in the long end of the curve may actually be the most prudent thing to do in hindsight. So I'm looking for a pop in bonds tonight if Harris wins to put on a condor, not to chase the trade to the upside, but to sell the volatility that the environment is currently yielding.
Some part of me thinks, I think you're right. When I thought through this, that the Harris win is a little bit more bond friendly, but I actually think there's a caveat to that. If we see a tight race in the Electoral College and the popular vote, if both those things are tight, I think the bond market breathes a sigh of relief. But if this is more one side, if the margin of error falls more for one person than I think the polls or betting markets have assumed, then I think the bond market might have a little bit of a problem. And I think that's where probably what you're hedging is that this isn't a landslide one direction or another, because then you're talking about a trifecta, and then that brings in a whole host of other kind of questions. And the thing that I'll throw on here is a small caveat to the budget discussion. And I've said this before, but I'll just bring it up again. I was looking for the CBO. I can't find the CBO for whatever reason. It's not coming up in the top of the search, but the Committee for Responsible Federal Budget is anyways, and it's close. My only caveat to the way that they put these things together is that they take all of the candidates' proposals as they've gone through this campaign, and then they add them all up.
Sure.
And I'm just, the only caveat I'm throwing out here is if people remember that she's thrown out some, the unrealized capital gains tax, and a few other pay-fors that help to minimize what this spending ultimately looks like. And you have to, in your mind, or the bond market has to in some way handicap the odds that if you don't have a trifecta, what are the odds that that actually goes anywhere? And this is why I think this is important. In March of 2022, okay, Joe Biden, and remember, this is middle of the term. If you remember, they dropped a press release. They announced that the president's budget, he announced a press release on their wealth tax, their new billionaire minimum income tax. This is March of 2022. This is right before the markets take it in the teeth. And this did not go anywhere. It didn't go anywhere. You haven't heard about it since the initial press conference. There was a few splashy headlines and a few news outlets. It didn't go anywhere. And so the reason I think it's important to bring this up is because while people are throwing around that one of these candidates has a $3.5 trillion, is going to add $3.5 trillion to the debt, and one of them is going to be 7 or 15. I think what people need to, the caveat to that is that one person's not really throwing out a bunch of pay-fors other than tariffs, which is not, I don't know how you do the backwards math to think about it as a pay-for, but that's not going to show up in here. Whereas one has thrown out stuff regardless of their intent to pass it or the probabilities it gets passed, and that is the big difference between these two numbers. And if some part of you thinks the way that I do is that some of those pay-fors they were posturing, it was red meat to a base, and they're not going to actually go anywhere, then to me, I think we're looking at the same candidate from the bond market's perspective in many different ways. That's the only small little caveat. I could be 100% wrong, but I think that's the little caveat that I'd put out there.
No, listen, at the start of this, I said, if you look at the scoring, they're just basically saying, oh, you promised this, toss it into the pot. Let's see how much it costs.
Exactly.
Right.
Exactly.
So they're not talking about the probabilities of anything's occurring. For example, you talk about raising the minimum wage. That's one of Harris's spending plan items. We haven't raised the minimum wage at the federal level in decades because there's never the votes for it. So yes, she's saying that she wants to do that, as every Democratic president has for the past several decades, but has it actually occurred? No. So we can add up all of these things. I would say if you have a divided Congress, the odds of any of Harris's spending or any of Trump's spending drop closer to 0% than they are to 100%, because then you're stuck in a world where we're doing continuing resolutions and just bumping up the debt limit.
I'll give you another one. Regardless of split Congress or not, it seems like the bond market has finally decided to wake up. You and I had a conversation, I think it was like April or May, and I go, when does the bond market wake up and decide to take the punch bowl away from everybody and say, you know what, I'm like, what's that movie with Captain Phillips where he's like, I'm the captain now? Like, when does the bond market wake up and say, no, I'm driving this car? And you make borrowing so expensive. And even the Fed lowering front end rates, as we can see, at least for the short term, that might not be the long term position of the bond market, but at least for the short term, the long end of the curve is not playing ball. Mortgage rates are back up to 7%, man. We were down to 6 1/3, something like this. We're back up to 7%. The long end is not playing ball, and we don't have this QE or YCC or whatever, and the market gets to price the real credit risk of the U.S. government and our spending. Then, I think at some point, it doesn't matter if you got a divided Congress or not, you got to listen to the bond market. And I think not many people are talking about that part of the equation either. Anyway, so you think there's an opportunity for a bit of a bond rally here, and on a bond rally, you don't want to put the iron condor on now. even though you think you're getting paid well in terms of volatility, it's because of the probability that you're going to test your upside strike. So what you're saying is on a little bit of a rally, you'd like to use, even though you might get a contraction of vol, use the still elevated vol to try to get yourself into something where you got a pretty decent wide range. And that's why you don't want to put it on now, but you will look to put one on any upside rally. Yeah,
that's the plan. And listen, for the past, we're going on 6 weeks here. The long deltas that I've had in bonds haven't worked. So I understand if people are like, oh, yeah, here he goes again. There's that bond bull. But it was a good run in July and August, right? And for the first half of September. But the caveat was when we went our way through the Fed meeting week was if this is now a reflation environment, bonds are going to suck. So having a long delta position there was in cognizance of this will only work if my broader theory is wrong. So it was almost like a hedge against my macro view about reflation coming back into play being wrong. So stocks going up, right? Oil bouncing, copper bouncing, like all that worked out fine for me. And so the losses in the bond were easily subsumed by the gains elsewhere. But at this point in time now, it's like the expected value play, right? This goes back to some of the betting market stuff that Jeff Joseph and I were talking about last week on the prediction trade. We've long held the view, and even when you were on as a guest, that anytime either candidate gets in excess of 60%, you would probably see at least one opportunity where those odds converge back towards 50% as we get to election day, just given how close the polls were. And as we've learned in recent days after the Wall Street Journal expose and tweets from longstanding betting market folks like Doma, for example, it looks like it was a whale who was cornering the Trump market, so to speak. The guy controlled 29.1% of all available Trump yes shares. So he was just constantly sweeping the floor, pushing up those odds. And if you're looking at a market last Thursday where it was like a 2-3 shot that Trump was going to win, you know what? The expected value, the higher payout, given how the polls were, you put $1 on Harris and you see where we go towards election day. So now that we're in a market where bonds have tanked so much, where's the higher EV on the trade right now? Like, where's more convexity? Is there more convexity to the downside or to the upside in the short term? And I would think after seeing bonds fall back like 10 points in the span of 5 weeks, there's probably a little bit more convexity to the upside if you step back and look at all of the fundamentals. And hey, that was a 12K non-farm payrolls report on Friday. We could talk about hurricanes and what have you, one-offs, but that is a weak number that portends a labor market that is absolutely moderating. And if a labor market moderates, the inflation is not going to stick around if it bumps back up in the night.
That depends on how much we print, doesn't it?
I don't think printing and stimulating the economy, I think, are going to be very unpopular moving forward, particularly as it pertains to making decisions that impact younger Americans, right?
Don't you think it depends on the pain? Everybody says that, but then you put people in a position of pain and then watch them ask for help. This is not an indictment of anyone who asks for help. But what I'm saying is, you elect a politician, you put him in office, right? Let's imagine that 12,000, those 12,000 jobs, they turn into something a little bit more. And I don't think that's your base case. I'm not sure. I'm not putting words in your mouth. I don't think that's your base case here. I think you think the economy is a little bit stronger than that. Correct me if I'm wrong. But imagine
stronger than
that,
a little bit. But not that strong.
You've been calling for the possibility that we get a negative print by the end of the year. You never put that out of the cards. I remember talking to you 3-4 months ago and you saying, at the rate we're headed, this is very possible before now and the end of the year. So kudos to you. My point is, you start cooling down a little bit more. It's unpopular now, but if people get into, the unemployment starts ticking up, we're 5%, north of 5%. You're getting yourself into a different environment in that point where people are asking their elected politician for help. And what are you going to do? If you don't do something, then you're out the door when midterms or the next election comes around, and you just keep refilling somebody who offers you the promise that you need, the help that you need. And I think that's the difficulty of the political environment that we're in.
I refuse to accept that America has become the UK. The UK is a fundamentally broken political system. I think that you've seen every single prime minister come in there and try to do something. I don't like Liz Truss's policies. Okay, let me just take a step back here. I don't think anyone's confused about where I stand on the political spectrum. Although, given some of the emails that Sosnoff shares with me, I think some people may think I'm much further to the right than I actually am.
I know.
I digress.
I think people do too. They don't know. They don't know who you are and what you represent.
Yeah, well,
That's kudos to you, though. I think you're fair and balanced, so it's good if people can't peg you.
I think we have to separate our political minds and social minds. Like, if you see me out at a bar, I'm going to talk a lot differently to you and talk about different things than what we talk about here on air, right? So you got to know your audience to an extent. But getting back to that point, like, I don't agree with, and I thought Liz Truss's policies were terrible, but were they that categorically different than what other Tory party leaders ever set forth? And the answer is no, not really. There were some things that were different that the bond market didn't like, but I think that was the lesson there. When someone tried to kind of take the UK off of this preset spending and taxing plan, it's an empire that's dying and its public finances are slowly eroding over the course of decades. The market said, no, like, you guys can't fix this. You try to fix this, it's just going to make things worse. Mm-hmm. You got to just do what you're doing. As bad as it is, you're not going to make it better. Like, this is it. The ship is sinking. Stop trying to plug the holes. Mm-hmm. And I don't believe that's the case about America. I think that we do have it within us to find the solutions to our problems, that our best days are still ahead. But where we are right now is a really troubling spot. There's a big thing that came out with Fannie Mae 2 weeks ago now about the state of the housing market in America. To get back to the place where we were in terms of affordability in 2019, one of three things needs to happen. Or if we're doing the Inglourious Bastards thing, three things needs to happen. One, you need to see a 38% decline in home prices overnight. Now, let me give some context for there. In the place where I live in New York, north of the city, the sharpest decline in home prices that we saw in the global financial crisis was 15% in 1 year. So just using the New York City metro area as kind of a measuring stick, we would have to have a home price decline more than twice as worse as what we saw during the global financial crisis to get affordability back to where it was in 2019. Okay, what else could happen? Well, the mortgage rate would have to drop from where it is today down to 2.35%. In COVID, in January 2021, the all-time low for the 30-year mortgage rate was 2.65%. So we're going to have more expansive monetary policies, more expansive fiscal policies, and an economic crisis where the globe eventually grinds to a halt, worse than COVID, to get mortgage rates that low. Again, probabilistically, that's not going to happen anytime soon, just like a 38% correction in home prices overnight is probably not going to happen any other time soon. So the last thing that can happen, according to Fannie Mae, is 60% increase in wages in median household income. Now, you could take a step back.
Almost got there.
Yeah, could be one of three things. It could be one of three things. It could be a mix of all those three things. But the reality is that it's not going to happen if we're counting on one of those three things occurring naturally. So supply side reform will not work. And the only way out of America's problems is to do what America does best. It's to build stuff. It's to take the risk and to build things again. It's to build more housing. You and I have been harping on this for the past, 2 years? Up until the global financial crisis, America's building around 25 million units per decade, 1950s onward. And then 2010 onward, we've been averaging a run rate of about 5.3 million units per decade. We are not building nearly enough supply right now in this country. And so younger voters are looking and saying, you know what? Home prices are higher than they were before. Mortgage rates are up. Right? Who had that on the bingo card? Mortgage rates are higher now, Victor, than when I purchased my home by about 200 basis points. And my home value is up 20% because we recently just got it appraised for a home equity line of credit. We're like, we're not taking it out yet because of where rates are, but we wanted to check in. So the same exact appraiser from the same company appraised us at 20% more than we paid for the home 2 years ago. Who the heck is getting access to their American dream and that kind of outcome? So I think that we have real problems here. We have the tools in America to fix them. We're going to fix them. We will. We go through these periods where it looks like we can't solve anything, and then we grow from it because that's what we do best. We are able to wipe the whiteboard clean. We're able to recreate ourselves and figure out a solution to the future. The guy who founded your country said it best. You know, what makes America different? You thought that we were giving up all of our industrial base to Japan and Germany, and then we invented the freaking internet. And then Bill Gates comes along. And we just figured out a new way to grow into the future. All those boomers and doomers, those doomers of Americana and Pax Americana through the 20th century, they were proven wrong. and every other country fell by the wayside. Germany's deindustrializing now. Japan's been through 20 years of deflation. America has the world's strongest economy with the world's strongest, deepest, most liquid financial markets. Yeah, we do have problems here, but we are one of the few places on earth that can actually solve them if we choose to.
We can solve them, man, but it's going to take compromise. And the issue here is, I don't think many want or are willing to compromise just yet. And maybe in a way you could say the compromises aren't fair. You know, people that have worked 40 or 50 years are getting to the end and we're saying, hey, we kind of spent everything you've been paying into this. So we're going to need you to work another 5, 10, 15 years until retirement. Another group is saying you worked really hard. You figured out capitalism. You built businesses. You earned wealth for yourself. And we're saying we need to take more of that back from you in taxes. And they're saying, hell no. The people who own homes are happy that they were able to buy a home. And people are asking, hey, we need to build more in your neighborhood, which is potentially that more supply in an area potentially has a harmful effect to people's existing home equity. And they're like, no, not here. And I think we've got a bunch of situations.
I'm fighting with my neighbors about that right now.
I know you are, where a bunch of people are rational actors, rational, self-interested actors in a system. And we now find ourselves at this moment of tension where all of those rational, self-interested actors have to find a way to compromise. And I'm not sure we're at the point where we're ready to come together as a nation and make those self-sacrifices on an individual level so that the nation itself can move on and prosper and build a better future for our children. I think we're close. I hope that we're close. I pray that we're close, Chris. Because if you were to ask me, and I think many of the people in this chat, are you willing to make a sacrifice? And wherever there are, we work a few more years longer. Will you give up some equity in your home? Will you give up, additional taxes? I think the answer is yes. But I think everybody out there, they don't trust that if you make that sacrifice, it's going to go to the right place, that it's actually going to go towards a solution. You know, you ask the libertarian if they want to pay more taxes, they'll say sure. But the problem is it's waste, and where's it going? And I think, the fact that you've got one of the world's richest people, saying, he's memeing a little bit with the Department of Government Efficiency, with the Doge Department or whatever. But I think he represents a lot of people that say, well, many people are willing to pitch in and sacrifice. But how do you make sure it's going to the right places? Because it damn sure doesn't feel like it, Chris. It damn sure doesn't feel like in Illinois and in Chicago, where property taxes are going up, where income taxes are through the damn roof. It doesn't feel like those people are living in safer neighborhoods with better education. It doesn't feel like there's better drinking water. There's 400,000 lead pipes throughout all of Chicago. It doesn't feel like you're living in better, stronger, safer communities, even though many people are making that sacrifice. And that's the problem. And we have to get to many people wanting to make that sacrifice, but also ensuring that if we do, those sacrifices go towards actually solving our problems. And that's deep. You got to cut to the bone to get there. And I don't know that all of us in our own single issue world, right? When people are mindlessly scrolling Facebook and saying, this is my issue, and I'm going to polls because I want this and I want that. I think if we all collectively understood just how big of a web of issues we have, yes, we can solve it, man, but we can't solve it through ignorance. We have to solve it by being clear-eyed and understanding our problems and understanding that the person across from you wearing the donkey or the elephant or the red or the blue shirt is not your enemy. They are the counterparty to your negotiation. And when you see that person with empathy and with humanity, and you're ready to sit down at the table saying, all right, this is what I'm willing to give. What are you willing to give? I hope that we're at that point in our nation, but it certainly hasn't felt that way throughout the campaign. What do you think, man?
There needs to be compromise, right? Like if we're in the market and you and I are, a buck wide on what we want to be filled in, and we want to be on opposite sides of the trade, we might both have to sacrifice 50 cents to get filled. And that sometimes is worth it. Ronald Reagan had a great quote, and I'm not going to say it verbatim, but, when someone offers you a loaf of bread, or when you're hungry for a loaf of bread and someone's offering you half a loaf, what do? Well, you don't slap it out of their hand and say, I want a full loaf. You take the half a loaf and then you go back and you ask for more. And that's really how you should negotiate, right? Like if I can go in with a list of 10 things that I want to get out of a situation, if I get into a trade, I want to get, I want to make $2 on this call spread, right? But I'm able to, okay, it's now 21 days to expiration. I'm sitting at $1.85 made. Is it really worth me hanging out for those 15 cents extra now that I'm rolling over the decay curve? And if this thing moves against me, I could lose a lot more than I already had in my pocket here. So sometimes it's worth taking the profits, benchmark it, take your wins, and go home. Now, I think we've lost that as a country for a large part. I think that social media and all this stuff has poisoned our brains. And you and I have long been on the same page about this, where we've lost our ability to communicate in calm, rational terms because our brains are now wired to be so reactionary, which in turn is why I like Scroller Jones. I get these 1,500-word essays at 3:30 in the morning, but I know that you've put some thought into it. You're not just there being like, sending a meme to react to something I sent you. This is maybe someone who I agree with on this or disagree with on this, but like there's intent behind it as opposed to just, you gutturally reacting to something.
I hope
hey,
close.
We have an election special tonight to discuss these things.
Yeah, stick around. I think we just blew our wad. Stick around at 6 p.m. Central. The Tasty Trade election unspecial. I got some more. They're getting a kick out of your doom scroller, Jones. I don't feel like I'm a doom guy. I feel like I'm one of the few like.
I didn't call you doom scroller, Jones.
I know they did. They did. I feel like I'm seeing the world clearly. If you guys think there's no problem with seed oils or microplastics or PFAS, then okay, I don't know what to tell you. Anyways, gold at $27.50, given your worldview, given your small sort of window of time, your view over the next couple of days, what do you do with gold, man? Because to me, this is a head scratcher a little bit. I could make cases for bullish and bearish moves in many different scenarios here. I'm not exactly sure what to do. Do you have a strong point of view in gold at 27.50?
I'm still long. Last week when we tagged 2,800 in the GCZ4 contract, I was in a long 2,800 short 2,850 call spread that I put on a few weeks prior. At that point in time, I used it with 26 days to expiry, I believe at the time. I used it to roll out to the G5 contract because I still believe in gold, right? And fundamentally, right, if you're going to be a momentum trader, you have to accept certain pitfalls to your approach. One of the pitfalls to the approach is that there will be a trade in the chain of momentum trades that ultimately fails you, right? We saw this with the S&P 500 earlier this year, where for the first basically 7 months of the year, I was doing long ES call spreads. And right, it worked January, February, March, April, it didn't, but then May, June, first half of July, it did, and then didn't. So, okay, once now we got to July, the volatility profile changed, the trade doesn't go back on. But you know what? You have to accept that risk, that if the market's going in one direction, you're going to play it and play it and play it until it turns against you. And so with the gold trade now that I have on, it's structured in such a manner that my max loss is about $7.80, whereas my previous winner was just short of $14. So the way that I structure these trades when I'm trading momentum and I'm chasing a market to the upside is I'm looking for something that has about a 25 to 30% probability of profit. I'm doing out of the money call spreads. I'm doing them beyond the tasty methodology of 45 days in. And what I'm doing is that once I find myself in a position where we're tagging the long strike, I am then immediately rolling out. But the risk is contained such that the loser of the next trade will only be about half the size of the total winner from the prior one. So if I ever get knocked out, right, if I'm ever wrong, it's not like I just wasted a month eating to the profits of the previous winner, which took me a month to make. It's okay. This is a smaller loss. So I'm still chasing gold to the upside here. It's been very kind to me. Until it's not kind to me, I will continue to have a working relationship with it.
You know, what's funny is I'm shaking my head because I do something similar. Synthetically, we do the same thing. Mm-hmm. So in reality, what I do is I buy the stock on a lot of this stuff a little bit at a time. And so I have a diversify my entry prices instead of picking one point in time, because I realized over time I'm not actually that good. So I like to buy the stock on stuff that I'm super excited about. And then when I have a decent gain, I like to collar this stuff. So I like to give up some of my deep out of the money upside by selling upside calls, and I like to take some of that premium and buy downside puts. Collar is a synthetic vertical spread. So in a weird way, you and I have a very similar way of putting on positions. You're just doing it through an explicit vertical spread. I'm doing it or managing my risk through collars. Interestingly enough, I had the short 50 call on Palantir in November, but luckily it was trading cheap enough I could roll that out and up into December at the 55s. So gold, I want to actually, here's the thing. When I look at the risk to reward, I like the idea of a gold dump. I like the idea of a gold dump on almost either of these candidates, but more so Harris. I think a Bitcoin dump on a Harris win and a gold dump on a Harris win, to me, but gold a little bit less so. To me, I like the risk rewards of those the odds there. The problem is I like gold. The problem is I like Bitcoin, but I don't know what happens under 4 years of Harris. I honestly don't. I don't know what her stance is towards the Bitcoin community. She's made some very loose promises, but it seems the Bitcoin community is not very enthused about the prospects of 4 years under a Harris administration. You check me if I'm wrong, but I think I like the risk reward of shorting both of these. I don't have this on yet. I can't bring myself to short Bitcoin. I don't think I will. I'll just buy it at lower levels. But gold, I'm like 50-50 wanting to put on short on gold before the end of the evening. What say you before we get out of here, my friend?
I understand why we could be seeing a pullback in gold. I don't think that it's going to be a significant pullback, just like with stocks. If there's any weakness overnight, if I'm deploying fresh capital, buying dips with enough duration.
I agree. I think most people, if you had to say up, down, sideways tomorrow on equities, or just to the end of the week, let me not say tomorrow, what do you think happens?
I have no clue because my model says there's a 50.015% chance that Harris wins.
My model. My quantitative.
That's my quant.
You should say.
He's my quant. This is my quant. It's my quant.
My quantitative. I would probably be leaning towards the melt up. Not that that's the sustainable trade. I think you get the vol crush first. You get a little bit of chase, and I don't think it matters who wins, but I think that's the market's position for that. You crush bond vol, you crush equity vol, you crush individual stock vol, currency vol, and I think all of that together could be a little bit of a release to the upside in equity risk assets. Once that's washed, then we get the opportunity of the reverse. My good friend, I'm super excited that your day fell on Election Tuesday to have this conversation with you. If the people want more from you, and they should, tell them where they can go, Chris.
Here, tastylive.com. Tonight, the election unspecial. It's starting in 4 minutes. You're going to be there. Sosnoff and Batista, they're hosting. Radigan's going to be there. Jones will be there. I'll be there. Spina, Logan. I'm apparently missing everyone's last names, but the crew's going to be there, right? We're also having interviews with John Phillips, the CEO of Predictit, and Tariq Mansour, the CEO of Kalshi. So be sure to join us tonight. That's where you can find me. The Tasty Live Election Unspecial, 7 to 9 p.m. Eastern. See you there.
Bring back seedless fruit, everybody. You have no idea that that's really at the core of many of our issues. Get yourself some seedless fruit. I will see you back here in just a little bit. If you want to follow me, the tweets of a madman at Victor Jones, the Owen Jones is a 0 because I like to be difficult, and I promise you, I will speak my mind until they take my phone away from me, no matter who is president. We will see you back here in a few, folks. Make sure, stay tuned to Tasty Live. Same great network, same great faces. See you in a bit. Peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock, Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
If you missed the live show, here's our cherry on top weekly recap.
Have you seen the picture of Sosnov's creation?
With the salami?
Yeah.
I heard about it, and I gotta tell you, it sounds delicious.
I just sent it to you. If you have your phone,
I do.
You can see a picture of it.
There we go.
Oh my God.
I don't know where you got a picture of this from.
This looks like a kindergarten class got together.
Childish.
Okay.
Childish, that's what I said.
And they said, the teacher said, go ahead, start making it. And they just started throwing slices on. They didn't know what they were doing. And then they toasted it. And the teacher looked at them and said, nice job.
Wait.
So as a parent,
Yes.
would you allow a 14-year-old party in your house?
No.
No, but I would allow as many pool parties as you like to have. The outside, pee in my bushes. Girls, you can come in and use the bathroom. Boys, pee in the bushes. You got to do anything else? Run home.
Finish.
I went out there when I had the music on. I started dancing a little bit. He goes like this to me. I could see him from like 15 feet away going like this. Breaking news on Instagram, the first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for cases when all I knew what to do was
right together, spin it around. Yup. And you want to clap. And then like strut down. Right together, spin.